Well, I was that way, and then totally against my desire. Brenda got me, because John Corey was for about 4 weeks was, you've got to be in Clubhouse. You've got to be in Clubhouse. I'm like, I'll wait for Android. He said, you can't wait for Android. You've got to be in Clubhouse. So Brenda actually bought me an iPhone just to go on Clubhouse.
Oh, blimey. Yeah. Good on you. So
it had to be done. There you are. How's your day?
Yeah, good. So I did it was fun enough. I was on a talk last night, and we had about 50 people on there. These are guys who basically are developers or learning to be developers. And it's one of my friends. They have a whole brand called Property CEO. It's quite good. And
I've heard of that. I've done watched some of their social media and stuff.
Right, yeah. So I know the guys who run that. So I was on last night as the guest speaker talking about finance, and I did a fair bit of plugging of equity. So see if I can drum up a little bit of business. So we'll see. So that will go out on YouTube hopefully soon. And they had about 50 people on there. So let's see.
Okay, very good.
What that might conjure up. So I get the concept. I went through all the documents you sent last night, David. So yeah, no, I understand the proposition. I'm just out speaking to people, and I've had a chat with the guy today. If you give me 1 second, because I just wanted to see what his response was. It was a project that was thrown at me last week, but I think he's looking for 100% funding. And I sort of said, what we're looking at is probably 30% equity, 60% debt, and you're gonna have a little bit of skin in the game. And I think he's got so many deals that he finds plots where you can put 40, 50 houses on. So I'm gonna have to find another way to solve that problem, I think.
Yeah.
But so this session was just cover the underwriting piece. So just so I can get my head around it, if that's okay.
Yeah, 100%. Yes. Yeah. No, let me quickly do what I did yesterday, I think, because that Leicester deal is probably a good one to explain it. I think you're like me. You like to see it sort of showing out as opposed to talking theory. So let me quickly share screens on that. And yeah, this wouldn't take too long. I can run through the high level on it. On the one hand, just to make clear as well, though, this is the way we've structured it, but in some ways it's a blank sheet of paper. If you can think of a different way, or a way that suits you better, I mean, there's no hard and fast rule on this.
But the developer has to have some skin in the game, or can you do this 100% equity and debt?
Again, if the underwriter is happy that the fundraiser is only putting in sweat equity, then that's, I suppose, it depends on the deal.
Because I've got this one, I've gone back to him and I've given him this matrix. I said, look, here's the stack, 60, 30, 10. And he's gone, I need to get 100% finance on this and the next project. So it's like, okay, now I need to go back and I need to check the spreadsheet on the numbers on that to have a look at it.
Yeah.
I think he was looking for about 600,000-700,000 of equity, but this guy knows what he's doing. And the funder that I would have used for the debt, they said, we've worked with this guy before, Rory. We know who he is. He's really experienced.
Okay. Well, that maybe helps. That then definitely would help the situation, Rory, if that type of level of experience. The other halfway house is that if we did a crowdfunding raise, well, I suppose it's the same difference. If he's underwriter, he would need to do that. On one occasion, what we've done is where someone says, look, I don't have the money right now. I can't write you an IOU for 10%, but I'm happy to take responsibility for 10% of the raise. And it's up to me to go and find the investors for that 10%.
Right, okay.
That's like a halfway house.
If I threw that to him, or to be honest, I don't know this investor, so I don't have a personal relationship. I get people contacting me all the time, David. I'm sort of active on social media, I've done some marketing, and on that one, his counter would be, that's why I'm speaking to you, Rory.
Yeah, okay. No, that's fine, yeah.
And I'd go, yeah, okay, his name's Mick. I go, okay, Mick, I get it. Let's have a look at it. But I said, but there might be a way where you've got, if you can raise 10 and go to the crowd for 30 and I can get 60 on debt, you've got deal flow.
Yes, correct. That's the key.
Yeah. If you've got good deal flow, they're good projects, they make sense, they're viable. I went through the numbers on this and actually looks quite good. I just don't have 700 grand spare because I'm considered on other projects and I've not worked with them. I'd be reluctant to throw 700K into a deal with someone I've never worked for. and it's building, I think, 48 new build houses. It's a nice project, but it's a bit too much for me.
It's a bit big, yeah.
I work on smaller projects because I know I can get in and out and I can manage the risk.
Yeah, I agree with you on that, and we'll be something similar with crowdfunding. You know, in terms of like development of residential, I mean, definitely, you know, 15, 20 houses, you go above that, you're into a much bigger situation where you're talking maybe even phases of build, which really complicates.
I think from memory, if you give me just 1 sec, hold on, because it's an interesting one, because I remember it coming in. 1 sec. Yeah, this was 48 houses from memory, split into 2 phases. Yeah. It's a nice project. You go, yeah, I just don't have 3.5 million. Oh yeah, it's phase 1, phase 2, 3.5 million cost, 2.4 million cost. Plot sales 4.1 million and 4.1 million. It's profitable. The profit on, I need to go back. His profit on revenue was 28%. Return on capital employed 45%. I just need to check what it was on GDV. And he was short about 800K, I think. It's like, okay, all right.
But yeah, I agree with you fully though, Rory, in terms of the size of deal, because once you move into like 2 phases, you're now, if you like, creating another hurdle for investors to get their funds back if they're not getting out until the end of the 2nd phase. It just, again, more can go wrong. So I agree with you on that. I think, you know, we would normally not want to get involved.
If it was 1 phase of sale, yeah, I think if as you say, if it was smaller, but we'll see. Okay.
Yeah. Okay. So
I might have another one. Just came through last night as well, which I've got to go through over the weekend. But yeah, let's have a look at this then.
Yeah. Okay. Great. So regarding the underwriter, then, so in this one in Leicester, which I showed you yesterday, obviously there was the whole deal, and he's looking 600,000. He had set his minimum at 400. So what we went to the underwriter was, showed him the equity offer document, showed him the deal, and we did this kind of a draft form because you're trying to line everything up. So when we had a draft document, you know, obviously you mark draft all over it. It's not a financial promotion, but we sent it to a couple of people and said, hey, this deal is going to come on the platform. We're looking for an underwriter. So that lets the conversation get started. We then, you know, got the NDAs and all signed as you would do, and then we linked the developer and the potential underwriter on a call. That kind of let both parties know that this was tangible and serious. And then basically the discussion centered around the underwriter needs to confirm that he can ring fence funds for 60 or 90 days. So that's him basically saying, as part of the deal, he's been paid to say, look, if I have to deploy 600,000 on this deal, I'm willing to do that. Now, it should never be 600,000 because
and they are committing to doing that. Unless
our crowd's going to take something. Now, it's hard for us to say exactly what our crowd will take, but for sure, you know, we knew the crowd would take like 100 to 200 of the 600. So if you like, point one, the underwriter saying, I will ring fence 600K. In this case was for 60 days. And the fee for that is 1.5%. So the developer basically saying, I will give you 1.5%.
Per month or?
No, that's 1.5% for the 60 days on 600,000.
Okay, so it's 0.75 a month.
Yeah. And that just literally means,
and that's just having it sat there.
Yes, it doesn't have, and this is part of the discussions we've had, because John Corey would prefer the money moved to our platform, albeit in the investor's e-wallet, but that incurs charges. So I'm not so keen to do that, but I think there needs to be some level of confirmation, be it a proof of funds or a solicitor's undertaking would be ideal in this situation, that money is ring fenced for this project. Okay. In this particular case, what happened was then the underwriter said, look, I'm only going to do this providing I can take at least 300 of the 600. So that was part of the agreement.
Okay, yeah.
So at least he knew he was going to have 300 in the deal as one of the ordinary investors. And that's to make it real clear. When the underwriter actually deploys his capital, he deploys it as part of the equity raise on the platform.
Yeah.
The funds aren't.
So he has, irrespective of the amount of money he's putting in, he's just buying more shares, but he ranks equally with the ordinary investors. Yeah.
Yes, on his deployed shares, absolutely. So
okay,
when we launched this down the platform, as soon as we launched, that guy went in and immediately pledged 300,000. So like day one when we launched, there was like 300,000, and then we had about another 150,000. Come on then. So we were like immediately over our minimum raise, like literally day one.
Okay.
So that means then.
No, that's fine. It was just understanding the process, the metrics. Okay, so the challenge I have, David, I have money just coming in and out all the time. Sometimes I've got funds, sometimes I don't. I mean, I've been working pretty mad since January the 1st to get loans out the door. And actually, to be fair, it's sort of working. I think I may have run out of cash. And I was on with an investor today going, have you got some spare money I can, as an investor I do some work with. But it's good to know this, and that's why I didn't want to take up too much of your time, just understanding how does it work. I think what I might be able to do, certainly to bring to the table, would be potential clients who want to raise money. Yeah, I think there's some scope for that. And understanding how you want that to work once you're clear with your introduce agreements or whatever in the next week or two. And yeah, it's worth. Now I understand exactly how this works. Okay, good stuff.
Yeah.
Can I just ask a couple of questions about your organization? So you're authorized and regulated by the FCA through a company called, I did look, there's a separate company.
Sharon.
Yes, yeah. So how does all that work? I.e., how do we make sure that you don't go and run off with someone's money, for example, the underwriter's money, or how does all that work?
Yeah, no, absolutely, really good question. So Sharon are the directly authorized FCA company. So they have the FCA license. Yeah. And then you have this status, what's called approved or appointed representative status, which is effectively mean we are like piggybacking on their license.
Right.
But they provide the white label platform. So we're effectively like a subcontractor, but all our processes is effectively their processes on their FCA license. So regarding the funds,
this with other crowdfunding entities as well, but different labeling.
Sorry, repeat that. Sorry, I missed that.
Yeah, so are they doing this with other crowdfunding platforms? So their label and you can buy. Okay, yes, that's what I'd sort of, because I went to.
Yeah, they have about seven. There's like seven other companies like us who are appointed representatives.
Right. Okay, got it. Yeah, that's what last night I just thought I like to do a bit of digging and just understand who I'm dealing with. Who's right? Okay, I've got that. So what happens with monies that get sent? Does this go into some form of escrow account, or how is that all protected?
Again, really good question. So there is a third-party payment provider. So that obviously is FCA authorized for third-party payments. We used to use Mango Pay, or they used Mango Pay, and then they actually started their own to let them do FISA funds. So it's called Sharon Pay. It's obviously separate from the main sharing company, but it has its own FCA license to be a third-party payment provider. So at no point does the platform have any control of any funds.
Right, I got you. Okay.
Zero. So if an underwriter wanted to move money, they have like an e-wallet on the platform, which is just a bank account, just a simple bank account. If I open an online account, they would transfer money into the account, obviously, which is, we have no access to that. That's the clients. It's actually the way the online works. It's actually a Barclays account. but it's like a Barclays online account, if that makes sense.
Yeah, no,
it's not like in a branch somewhere. It's like an online account. But it's like it's a Barclays account effectively.
And you control that yourself as in if I was the underwriter, I'd control my own account.
100%. Yeah.
Yeah. And so I have to send the money from that account to you. Do you have visibility of that account? Can you log in and see that account?
Yes, correct. Yes, we absolutely have visibility to see who has what in the account. And then what happens is when they make a pledge on the platform, that then would ring fence that amount of money in their wallet. If they've chosen to do it via the e-wallet. So after they make a pledge, it's still their money, but they don't have control over it at that point. It's like similar to a bank, such as undertaking, effectively. So it's still theirs. It's still theirs. We can't control it, but if they have the ability to cancel their pledge, which then obviously means they have their funds again.
Okay.
So they make a pledge, it's ring fenced, but they have the ability to cancel their pledge. So the only point it then goes beyond their control is after they have approved the shareholder agreement of the project they're looking at.
Yeah.
So they'll receive an automated message. It's all done by the back office. They'll receive a message that will say, this is the final shareholder agreement. If you're happy, click the approve button. And that is you confirming you want to do this investment.
Gotcha.
When they click that button, the money then moves to the project e-wallet.
Gotcha. Yeah.
Okay. But at no point do we touch it. At no point do we hold or touch any funds. We're not licensed for that. All we are is the facilitator, and it's all done through third-party payment provider.
So also for your business, David, I've seen quite a few name changes and also different personnel. What's the sorry, the reason I'm asking this, we had a major fraud a few years back, and that person hopefully will go to court this year and spend some time in a large HMO. So I've learned a lot through just wanting to ask the questions just to understand.
And you're listening to the right questions to ask. I'm actually pleased for asking because it shows you've actually taken time to have a look, which is good. I mean, anything I say now you can verify with John Corey independently, because I employed him initially. Paid him as a consultant right from day one when I started the company, and he's been kind of my advisor on this through the whole journey. So feel free, more than happy to reach out to John and ask the same questions for him.
Sure,
has any concerns. So basically, originally when we started, to do this nice and briefly, 2017. Since about 2013 originally, but I was working with a company called Leo Learning Enterprise Organization. When I say work, I was self-employed initially, and a friend of mine had known for like 25 years, and I was his property advisor. So I literally was doing high-end portfolio building for him around the world. We spent about 6 million buying different assets. We got to 2017, and basically had spent all the money that he had. And he's like, I would like you to still be working with the organization. And he had a big global 6 offices, 120 staff around the world in a direct sales company. So I then said, look, what about we start a property crowdfunding platform? So February 18, we registered what was originally called Leo Crowdfunding. Was the first sort of registration name. And he basically funded me, Rory.
Okay.
So he literally funded the deal. We were probably spending about 12 or 13K a month at that point. For him, it was a marketing spend. Been able to say that he had an FCA authorized like sub company as part of his ecosystem. So I used to go to conventions, different parts of the world, talk about property, and obviously was able to say, well, I'm an approved person on the FCA as part of the ecosystem. So we kicked off in November 18 when we eventually got the FCA license through Sharon. We had a launch in November 18, which was actually at John Corey's monthly meet. That's whenever we launched the company, like open for business. At that point, obviously, we had no deals and no investors. It was just literally we opened the doors. By Q2 2019, Dan Anderson and Leo started in a bit of financial difficulties. And there was then pressure on whether he could still fund me or not.
Right.
So originally we were set up to sort of service people that he would bring The idea was that his people around the world could invest in deals, in the UK.
Yeah.
So we got the summer 2019. He clearly was having financial problems, wasn't able to commit to funding long term. So I says, well, look, we've two choices. Either we just close the company and I go a separate way, or I take over the company. So he was more than happy for me to take over the company.
Okay.
So originally Bernard Landy was the first director with me, and that was the CFO of the other group of companies.
Yeah.
So the FCA then said, look, he's in too many other companies. If you hold an approved license, you have to be able to prove that you're committing the majority of your time to this company.
Okay.
So he came off, and another director of that other company called Mahir Magudja came on as a director, but like was there just a name over. That was like Dan's 50% of the company.
Yeah.
So fast forward to Q4 2019, I then took over the company. Dan, for the money that Dan had put into the business, he confirmed that was seed capital. It wasn't a loan. So if you look at the accounts in Companies House, you'll see the director's share account, will have money, which was the money that was invested initially in the business. So when I then went to Aisha Forey, brought her on as a partner in January 2020, we literally had a company with I think it was like 70 quid in the bank or something, but it was clear of any previous, previous business. So effectively relaunched, if you want to call it that, in 2020, and then set about changing the name to Leo Crowdfunding.
Yeah.
Okay. Now, without digressing, it went from Leo.
There's about three names I saw.
Yeah. Leo Property Crowd was the initial one we registered.
Yes.
At the launch at John's event, the company lawyer, a guy called David Blair, who had advised us setting up the company, came to me afterwards and says, you do know there's a company called Crowd Property in crowdfunding, don't you? And they're also a client of mine. And I went, well, yes, but we're Leo Crowdfunding. And he's like, that's maybe a wee bit too close. So he arranged a meeting with Crowd Property. They weren't overly happy that we were using Leo Crowd Property, so we changed the name to Leo Prop Crowd. So that's where that came from. So we're Leo Prop Crowd, and then we then became Leo Crowdfunding. And hopefully it's never going to change again. Hopefully.
No, that's fine. No, because I went through it going, cool, there's a lot of name changes. And I think I've met one of the names that you mentioned there. Surrey Property Exchange is a networking meeting in Guildford that I was a sponsor of for years. But because of COVID, I don't do the online sponsorship now. And I know what the guys have come in promoting this, I'm sure, in the last couple of 3 years. I can't remember exactly, but okay. No, that's fine. Yeah, no, it's just good to understand the backstory. So you guys have capital, you're fully funded, or yesterday you mentioned something about you looking to do a fundraise. So do you need to raise funds for the business to survive, David, or is that just?
No, so not to survive, but to scale up the way we want to scale up. So we have to provide, to give you a little bit of comfort, we have to provide a balance sheet every quarter for the FCA, principal.
Yeah.
So we have to show a certain amount of money in the bank. We also have to have another 25 grand to cover the PI insurance, the initial payment on that. And then there's a balance sheet formula they have. So last summer, there were a couple of companies that lost their license over the balance sheet not being strong enough, i.e. cash flow. You kind of need to have like 3 months in the bank to pay your outgoings for 3 months. And then have other things to cover. So, I mean, we are absolutely fine on that. We're under no pressure, on that at all. I mean, we're sitting right now, I think about 85, 90 grand in the bank right now. And we're doing this raise. So we have raised some funds through the raise. But what we want to do, to be honest, is go direct to the FCA. We want to have a license direct with the FCA and not working through a principal. That costs about 45, 50K to do. We have actually started that process, but we obviously want to make sure that we can do that properly. That will definitely involve requiring at least a hiring of one staff member because compliance then comes in-house rather than being done by Sharon. We also want to move into an app. We want to develop some in-house development and have a property crowdfunding app, which is like educational. And again, you're looking at 50, 60K for that. And we also want to hire a investor relations person, someone that can really nurture our high net worth individuals particularly. So we have it all costed out in a nice business plan with a full pitch deck that investors get when they've signed the NDA, explaining it all in detail, showing all our revenue to date. So yeah, that's kind of pretty.
And do you see, I'm just conscious of time, so with sharing and obviously them white labeling their expertise to say 7 other entities just like yours, do you see consolidation in that market where you could be taken over or you take over someone?
There are numerous conversations happening with platforms who lost their license. Absolutely, about that.
Because I can't see a market be that. Listen, I could be wrong, but 7 or 8. Well, that's 7 or 8 there, and I know there was a matrix I saw, and I thought, blimey, that's a lot of players in a small space. You need to be the one big whale, ideally.
Well, there's probably room for a couple of big whales, but you need to be a big whale. I agree. I don't think you're ever going to get in this type of market like one big whale, just because of personalities. It's very hard to have a platform that does everything. What tends to happen is, Rory, platforms focus on certain things. So if you take crowd property, which is probably the biggest debt based, I mean, they don't touch commercial, they only do resi. So there's a whole market there for commercial and debt out there, and it's the same on the residential side. There's companies that wouldn't touch planning. We absolutely love planning. We think planning uplift is brilliant. So you're always going to have those nuances, and therefore I think there'll always be room.
That's a fair point. No, okay. Listen, David, that's great. I understand the proposition. So action plan. I'm always speaking to people where I think there's an opportunity for me to introduce potential clients who want to raise. That's the first thing, because I'm just active. I'm out there. The equity bit is the challenge. It's just understanding what's the sweet spot for you. So I don't bring 48 new build houses at 800K. That's probably just a bit toppy, but there might be something elsewhere that could work. And just, it would be good to know that what's the process, because I can certainly do that if I've got it top of mind. And then also, how do we work the introducer piece as well? Separately, so I now understand the underwriting bit. I think right now, so like if I was speaking to you on January the 1st, I'd go, yeah, I'm up for this. Whereas now I've been so busy and literally just putting myself out there, been a real proper tart. I've just, who needs loans, what's going on? And I've got 4 or 5, 4 cases in with lawyers now. I've got another 2 or 3 bubbling. And I spoke to an investor today. I'm like, hey, maybe out of cash. But you know how this business works. Tomorrow, a couple of things I'm going to look at over the weekend. I might go, yeah, we don't have an appetite for that. So you just never know. What you start at 9 in the morning, at 5, it could be a completely different landscape. That's the nature of the beast. So, but it's good to know that. And I can see that something. And I might even have a look at popping a couple of grand in a couple of deals, to be fair, as well. Just test it as well, just to see how it works. I think it's a brilliant idea. I love the idea of it. I didn't really understand it, as in you just don't focus on it. But I can see it solves that problem of, okay, I've got some, I've got a little bit of money, I can get the debt, but where do I find the rest of it? And more to the point, which I hammered the point last night, was the FCA compliancy.
That is, to me, that's what I call the perfect storm. And that's why I did what I did. People can say, why did you get in? And it does limit me because I'm an approved person. There's deals I can't get involved in. There's introductions I could make and money so for instance, that underwriter relationship, we cannot take 1 penny, Rory, for introducing the underwriter to the developer, because that's off the platform. And I know what some people would do is try and create some sort of scratch each other's back type system, and something happened. We're like, no, we're not interested at all, because we cannot be seen to take any fee for that. We'll make our platform fee.
Your business is in jeopardy.
We'll do a platform fee. But one of those things. So like, I know if I wasn't an approved person, you can make a few grand here and there by introducing people. And it's like, I like the idea of compliance. I like the idea there's a big umbrella, and that when we, as long as we abide by those rules, we've got a business. And I think people are comfortable with that, So what I'll do is I will get Josh to send you over what we call our vanilla criteria. So that's kind of the way we like to see what we call a perfect deal. It's usually only 400 or 500K raise, but I'll get him to send it over to you.
Right.
Also to send you the DD that's required. So it's a document which will show you what we need from the fundraiser. So that'll give you an idea. It's all the stuff you probably do anyway for a loan. Be very, very similar, I'm sure, for your bridging finance, but at least you'll see what we're after.
No, great, good stuff. That's probably David.
Yeah, and if you find if you do know anybody, if you know anybody that's potentially interested in investing as an equity investor, and what we have done is gone down the right move type route, where it was almost like a bunch of competitors coming together. So we have like some of our, certainly one of our fundraisers decided to become a shareholder, so that he's almost like double dipping. He's getting his deals funded, but he's also benefiting from the growth of the company. We have, people who have been investors on the platform, and they're like, you know what, rather than putting 40, 50 grand in the next deal, we'll invest and become shareholders, because they like the idea of actually being part of the company rather than just funding deals. So we had actually talked on like 6-7 months ago about reaching out to some type of it was probably more the senior debt lender type as opposed to bridging. But again, there's no reason why, if you have a look, I'm not saying like right today, it's early days, but if you have a look at this and think, you know what, I really like this, one option is that you become a shareholder investor, maybe end up on the advisory board, something like that, and be part of the company going forward. That conversation is worth having. All right, so I'll leave it with you. If you feel that is something that you would look at, then obviously I can get you the full pitch deck.
Listen, I could have a look at that, David. I mean, one of my challenges, my son got involved in a tech startup, and we put some money in through EIS. Anyway, with COVID, but before COVID, it killed it, and I think we've just lost 20 grand, which is like great, because that's just they've not folded the business yet, and there's a whole process you've got to go through, and we've got some of the money back through tax. But basically, it just didn't. It was like Auto Trader for diggers and big pieces of plant and equipment. It's a great idea, but when you started there, you were talking about doing apps. For them to get the tech absolutely right, they've got to spend millions. I mean, they've probably thrown 500,000-600,000. It does. You don't really understand when you look at the user interface what really goes on behind the scenes. It's phenomenal amounts of programming and work, and and then COVID hit, and it's like wow, I think that's money that's sailed.
Well, the EIS though, what would you get back? 50% EIS? No.
Well, again, I'm a bit cross with myself on that, because I went, okay, look, my son's going to work there. Effectively, I'm going to be funding part of his salary, and we don't. I'm going to be honest. I was under the impression that you couldn't lose your money. That is not the case. You get, I think we put 20 grand in. What do we get? 40% back. So
40%, something like that.
I think it's 30 or 40. So we've had that bit back, and I've said, look, guys, do you want to buy my shares back? And they listen. COVID's killed the business. They're instead of running a business with an app and a piece of software, actually what they're doing is they're going out wheeler dealing and going, right, we'll buy that big generator that's come off an oil rig, and we've got a guy in Nigeria who'll buy it. That's not what the premise of the business was. The whole idea was you do all of this online, a bit like and so it is what it is. No,
well, if the time isn't right, we have an EIS. We can do EIS as well in this round, so we have an EIS round. But I'll tell you what I'll do, because I think to be fair to you, because I know you like to do your DD, I have no problem with you. I'll get Josh to send you the NDA. That will let you look at some more detail. That'll let you look at our finances, what we've done. If it turns into a small equity investment, great. If it doesn't, no harm done. You've had a chance to look at us sort of with our clothes off, effectively.
That's good. It gives me an opportunity when I'm speaking to people, going, look, here's a great idea. Then I just need to understand, okay, as you say, what's the criteria? Look, if you've got a little bit of money, go look at this platform, do it properly.
Absolutely.
Lovely. Okay. All right, David, that's great.
That's fine. No, 100%. We'll be in touch, and you get an email from Josh probably later on today at some point.
Lovely. Good stuff. Have a great weekend.
Rory, thank you. And yourself. Good luck, mate. Bye-bye.